Talk about inflation. We need to talk about Billionaire Barry. And I want to give a special shout out to a Houston real estate agent and broker, Jeff Bowman, who created a chart that I think all of you need to check out. You can find it on my Twitter feed, One Rental at a Time. Folks, I'm doing this daily financial news from a very, very empty room. It won't be empty forever. We will fill it up with a bunch of goodies here. Some One Rental at a Time swag and the like, but we are getting started. Well, anyways, thank you for joining. Let's get into it. Let's talk about CPI. Again, let's level set you what happened, and we will talk about the expectations. So going into CPI, we track four numbers. We track headline and core, and we track month on month and year on year. So expectations going into this, where headline would go up to 3.3, core would go down to 4.7. Month on month for both readings would be 0.2. The good news is CPI came in a little bit better than expected on the headline. Headline came in at 3.2. The other three metrics hit expectations, 0.2, 0.2, and 4.7. So the most telling inflation number was something that I highlighted earlier in the week, was what percent of inflation was shelter. Shelter over the last 6 months or so has been averaging 50 to 60%. So if you were to back out shelter, because we have talked about shelter being a rolling problem, we would understand that inflation is getting better across the board. What happened this month? This month, inflation was 90% shelter. Owner's equivalent rent, shelter, things of that nature. So again, we know, or at least I strongly suspect, that the shelter inflation starts to roll over next month and will get increasingly better for the months after. If you want to know what it's like, think about a roller coaster. And there are 12 cars on this roller coaster. And essentially what happens is with shelter is each month you put in the shelter cost, and it just takes time for the average to roll over. So we've already seen the first couple of months in this rollover. We need to get to the middle to kind of see the impact of that. And based on some rough math I did about 6 months ago, I always thought the August reading that in the September report, right, comes out in September, we would see shelter start to roll over. Well, it's going to be time to see if I'm right, and that starts next month. So again, other things that we saw besides shelter inflation being 90% of inflation was that airline prices fell 8.1%, used cars down 1.3%. So we are starting to get some true deflation, not only disinflation, right? Inflation prices are going up, disinflation prices are going up slower. And of course, deflation prices going down, a la airlines, down airline tickets down 8.1%. So lots going on there. Also on Thursdays, you and I get the unemployment report, the weekly unemployment report. And this is probably the best metric for you and I to see what is going on in the economy. And what we saw this week is that the weekly unemployment claims surprised to the upside, right? For the last 5 weeks or so, it is surprised to the downside. Now, 1 week is definitely something that you and I should be watching for. So again, where did it come in at? Expectations were 230K, came in at 248K. Again, my belief is that the Fed wants to see this number at 325,000. So, we have some work to do. We are certainly off the bottom at 220, so pretty interesting stuff. Something else going on is we are clearly seeing a freight recession. I don't know if you've seen the latest news. Obviously, Yellow, the trucking company, went direct to bankruptcy. But the freight recession, demand is down 15%. I think this really goes to the rolling recession. Again, we are so used to kind of these recessions that you can call out on a chart, right? They're just directly down. I would ask you to check out the 1990 recession. That it's clearly, I think, more like we're going through, where different segments feel it at different times, right? Housing felt it last year, freight's feeling it now. And again, I think housing is kind of coming off the bottom, but we shall see. So yes, something to watch for. Other things to talk about. Let's talk about good old Billionaire Barry, right? Billionaire Barry is someone that we've called out on this channel for being an illiquid billionaire. 1 second, please. Hey, buddy. Sonny wanted to make a surprise appearance. I don't know if you could hear him whining, but yes, he wants to say hi to everybody. So again, back to Billionaire Barry. Billionaire Barry is looking to potentially dump some debt that his Starwood is holding. Looks like he might be taking a 70% haircut. Yes, as Billionaire Barry looks to add liquidity, add cash, he is selling whatever he's selling everything that's not nailed down. I really do believe Billionaire Barry is trying to create a fortress of cash so that he can survive to 25. So how does Billionaire Barry and frankly other real estate billionaires do that? They look at their portfolio. They figure out what things they want to keep long term. Then they figure out what they can sell to raise cash. And then they negotiate hard on anything they are willing to let go. That is the exact playbook that Billionaire Barry is doing. As you may recall, he sold Invitation Homes, 1,900 homes, of which he got $450 million in cash. Now he's looking to sell off some debt to raise cash. Billionaire Barry is running frankly, a playbook that says, I'm illiquid, I need cash in order to survive. Not to be outdone, I think you're going to see banks, big banks, regional banks, do the same exact thing. In fact, big banks are increasingly looking to dump troubled commercial real estate loans. Unfortunately, there are no buyers. So in Billionaire Barry's case, we're talking about a 30% haircut. That would be like a $200 million loan being sold for $140 million. So we're looking at these big banks who had troubled assets. How big a haircut are they willing to take? Some of these operators are actually looking to finance the debt. This is exactly what happens in a crisis. We talked about small business. We talked about luxury real estate. There are people that have to sell. And the only thing that people think about is price, price, price. If you know what you're doing, you can negotiate terms. Does anybody think that a Class A office building, or maybe it's a hotel or warehouse or something, won't be a great asset to own in 5 to 7 years? So instead of beating up that seller on price and just being another vulture investor, what if you went to them and said, you know what, Mr. or Mrs. Seller, I will give you your price or almost your price if you finance the deal. Oh, by the way, I'm not going to finance the deal at today's interest rates. I want you to finance it at 2020 interest rates. That's how you do this. So again, in a crisis, it's not all about price. This is something I hopefully bring up a bunch in the course, How to Get Started One Rental at a Time, how to structure deals for win-win, all of those things. So again, in a crisis, please hear me. It's not always about price. If the seller is in a situation where they have equity, or in a bank's case, they own the note, they can structure it for a win-win. So please get creative. Understand how changing the financing costs can dramatically increase the yield in real estate, in small business. And this is what I think Cody Sanchez has unlocked in small business. A lot of small businesses are struggling. A lot of operators don't want to move forward. Find a way to give them their price if they give you your terms. So again, lots and lots of going on. I don't know if you saw this article, but it certainly hit my news feed. Do you know what the average UPS driver will make going forward? Yes, that brown truck that delivers all those goodies from Amazon. Based on the article I read, the average UPS driver will make $170,000. I'll just let that sit there right in the middle of the room. $170,000. That's pretty cool. That's pretty cool. Other things to talk about. First and foremost, I want to thank everyone for checking out my new channel, The Daily Financial News. We are 250 short people away from hitting the first metric to get monetized, which is 1,000. I will leave a comment here. I tried to leave a comment earlier, but I didn't know how to do it on a live stream. Sorry about that. I'll try to leave a comment below. But if you could do me a favor, go check that out and subscribe. I'd love to get over 250 this month, frankly. The channel launched on July 24th. I would love to get to 1,000 in under a month. Again, that channel is dedicated to bringing in a new audience. I believe One Rental at a Time is rebuilding the middle class. It is helping people understand that focus and effort changes lives. I need your help to have that channel take off. The One Rental at a Time, the channel right here, will always be live and nothing is changing. But if you could help me grow that other channel, help us get the watch hours up to 4,000 so that we can get monetized. Why is monetization important for me? Because YouTube starts to push it when they get their VIG or their cut of the ad revenue. So if you could help me do that, it's just the Daily Financial News. I will leave a link below and I'll put a pinned comment. If you could help me get to 1,000 subs and 4,000 watch hours, I would appreciate it. I will keep bringing you the Daily Financial News live here. I appreciate that. So let's give a special shout out to Houston real estate agent and broker, Jeff Bowman in real estate. First, shout out Lance Lambert, who found it. I since reposted it. You can follow me on Twitter or X if you'd like, One Rental at a Time. What Jeff did, and I would, hear me out. If you're a real estate agent or broker, you have to copy Jeff. You have to. This is the kind of value your buyers and investors want. So what did Jeff do? He basically created a chart. In the chart on the left-hand side were all the zip codes for Houston. Then across the top, he had 6 price categories. But then Jeff brought the magic. What Jeff did inside each of those records, which would be, I think it was like 48 cells, from left to right, this subtle thing that is perfect. He color coded it from bright red, which meant seller's market, to ice cold, the luxury market. And different zip codes had different colors, right, across the board. But when you look at the chart, it's like, darn it, that's exactly what Zuber's been telling us. The low end, below the median, scorching red hot. The luxury market, ice cold. And it is so interesting. I know nothing about Houston, but looking at this chart, I could get a great feel what's going on above and below the median. So again, look at my Twitter feed or X feed, whatever we're calling it these days. Follow me there. And if you're in real estate, I challenge you to do the same thing. And I would love to see it if you want to tag me on wherever you are, Instagram or whatnot. But again, shout out Jeff Bowman for doing that for Houston, Texas. I think it is awesome. Another thing I want to talk about is I think a lot of you are missing out on a extremely valuable course. It's $47. It's called The Legends of Real Estate. The Legends of Real Estate course is something I did with Anna Kelly, April Crosley, Casey from Brick by Brick, and Alicia from Huntsville, Alabama. Those 4 ladies brought the heat in that session. They all talked about how they got started. They all talked about the evolution of their investing and what they are doing today. And the beauty of Anna, April, Casey, and Alicia is they're all doing different things at different times. That Legends of Real Estate event is really being underappreciated. And what do I mean by that? So I have a teachable platform. I could see people, which ones you guys are buying, obviously. And that Legends of Real Estate is not being appreciated for the value that it gives. So again, you should check it out. You can go to my website, onerentalatatime.com. You could see all of them there. And again, if you buy the course at $399, you actually get 2 2 free $50 courses if you would like. So again, understand that that is there for you. But yeah, the legends of real estate. Other things that I noticed, we got some earnings report. Wynn Resorts beat top and bottom. Six Flags was interesting. We talked about that as a report I would look at. They missed top and bottom, and their spending per guest is down. So one of the things that we've been talking about is we went from buying stuff to experiences. I am wondering, again, this is just what I'm looking at, is are we done with experiences? And hey, it's time to conserve. It's, you know, what are we doing? So again, we got to watch consumer behavior. It is very, very interesting. No, I guess the last thing to talk about is a report that from myelistings.com said that California has lost $340 million in tax revenue. Yes, folks, there are a lot of California residents, myself included, that have looked to change residency. And according to Redfin says that 25.5%, so let's call that a quarter, of California residents are shopping out of state. King Newsom, wake up. Pay attention. This is on you, brother. All right, everybody, take care of yourself. Have an amazing day. Again, please check out the new site, Daily Financial News. I will put a pinned comment below and put it in the show notes. I would greatly appreciate it. Also, check out the Legends of Real Estate with Anna, April, Casey, and Alicia. It is truly extremely valuable. Those ladies brought the heat. Take care, everyone. Bye.